Hello, everyone, and welcome to another edition of This Week in Crypto. I'm Brian. I'll be hosting this call alongside Dino, and we're excited to have you all here. We're going to be talking a little bit about Bitcoin's recent surge back above 11K, DeFi's demise, and plenty of other topics that many of you may be wondering about right now. I will be starting it off here in just a moment with a little look at some of our models. And then about 20 minutes in, I'm going to hand it back over to Dino so he can discuss some of the topics that he wanted to go over. As always, I want to remember that we have a 25% off code available. If you enter Signals25, you will be able to get a month off for 25% off of the normal rate, and you'll be able to see exactly all of the on-chain and social metrics that we normally go over on these calls. Remember that on these calls, we tend to talk about plenty of different things. They aren't necessarily investment advice, but we try to use objective fundamental indicators to really talk about what is happening in the markets and how to best sort of diversify and situate your own portfolios to prepare yourself based on the overall health of the network at any given time. As you can see here, we have our DAA divergence model, which many of you may be familiar with. If you don't have access to it, by having a Sanbase Pro account using that 25% off code, you'll be able to access this at any time and see exactly what kind of on-chain daily active address divergence may be appearing simply by comparing what's happening on the overall health of the amount of addresses showing on a network compared to the historical price level. And using this model, we can actually take a look at how many are showing bullish or bearish trends at any given time. Right now, I'm going to show you what Bitcoin looks like. Give it just a moment here. I'm going to shrink it so we can see the whole screen. All right. So what we're looking at right now is the past 6 months of bullish and bearish divergences. As you may expect intuitively, we've got the bullish divergences showing in green, red is bearish. And over time, you can see that we kind of got into bearish territory. Last time we visited 12K. Right now, we're back over 11 at about 11.1. And we've been in choppy territory for quite a while. We've had this series of greens that kind of foreshadowed that we would jump up, and we got up to about 11K back in mid-September before we started getting, these big red bars here, indicating we were getting a bit of a deficit in daily active addresses. After dropping, we had a little bit of choppiness, a little more red, but the price was able to stabilize, and it's actually jumping up right now, despite the fact that there isn't really a lot of major encouraging signs. And I want to actually show what this looks like on our Sanbase account, which is essentially our home base where you'll be able to find many of our on-chain and social metrics. If I go to Bitcoin here and I click on the left panel where you'll find all our metrics, you'll want to go to on-chain, network activity, and daily active addresses. Simply click it once and then click here again to apply it to the chart that you were looking at. And you'll see that right here, I'm going to maximize this screen a little bit. All right, right here, we're basically seeing that we did have a fair amount of growth over the past 6 months in DAA. The problem is, especially right here, if you look at the price bar, price line that is, we jumped way up from about 9K to 12K without getting much major increase. You can see here we were already getting 1.08 million back in July, and we peaked at about 1.13, which really percentage-wise wasn't nearly the jump that price was. And sure enough, because of the fact that DAA didn't really go higher like it should have, we had that drop, and then we kind of have stayed in this range. So basically, Bitcoin is having these major fluctuations over the past few months, but not really on the same end. If you look at kind of these orange bars on a smooth scale, they're kind of just staying in place. And that's why we're seeing this choppiness and a little bit of kind of, these little drop-offs of $300 to $500 in price like we did, to end September and begin October. What happened if we look at our screener, what happened was we essentially had a drop off 3 or 4 different times over the past 3 weeks, I believe. And with each of those, altcoins just got decimated, really. Altcoins were basically at the mercy of Bitcoin's volatility. And whenever Bitcoin was dropping off, the alts were essentially going down twice as fast on average, sometimes even more than twice as fast. And then when Bitcoin was able to recover, you weren't seeing the same sort of recovery on the altcoin end. And I'm going to get rid of a tree map here so I can show you the actual price bar. So this is the last 24 hours. You can see it's just been a sea of green because we've actually had a really nice bounce day since market open about a day and a half ago. And it's encouraging to see things like this. Obviously, you know, we have major outliers like Wi-Fi, where a lot of people were doubting it and saying that you know, the founder had left the project. It was basically the end of the line, and because of all that FUD, you know, we saw a major bounce from opportunists who realized that going against the crowd would be a great opportunity to catch a falling knife, so to speak. And we had plenty of other projects that were able to do quite well as well. SUSHI, of course, another famous DeFi project related to Wi-Fi. And then, you know, the large caps, they were actually a little more tame, and most of the bounce came from the mid and small caps. But if we look at 7 days, it's almost kind of a flipped story because, like I said, to begin the month, this was all looking like a sea of red around the beginning of October, especially on the mid and small cap side. There were just tons and tons of large red bars here, while Bitcoin, Ethereum, Ripple, they were actually mostly about neutral at the beginning of the month. So they've climbed slightly. You can see Bitcoin's up 6%, Ethereum's up 6%, Ripple 10%, Bitcoin Cash 10%, Binance Coin 8%. These projects are basically climbing slowly, and the reason for these larger bars is mostly just because they've bounced and recovered pretty well after just being crushed. Now, that being said, if we went to see, we can't go beyond 7 days, but what I'd like to show you is kind of the returns of how they've looked over the past month or so. So let me see if I can do a quick comparison here and show you. I take off DAA here. I'm going to go to compare. I'm going to go to Wi-Fi. I think that would be a good example. And I'm going to go to price. And you can see sort of what I'm talking about here. We'll do just the last 3 months. You can see that Wi-Fi here absolutely ascended in mid-September, but by the latter half, it was just dropping. And this is how a lot of assets look, particularly DeFi projects. And you know, we had a bit of a recovery at the very end of the month before just a much larger drop. And remember that these are using 2 different axes. So Wi-Fi is actually off the charts here. So it was way down here at the beginning, had a ton more volatility. And percentage-wise, if we were to line these up one against the other, you'd really see that there was a major fall off right here that caught a lot of people off guard. But like I said, over the last 24 hours, this is over a 30% recovery here just between October 8th and October 9th thus far. So really interesting to see there. I'm going to go back to DAA right now because I want to show you some other projects that look interesting right now. Before going into some that I've been seeing look pretty bullish, I do want to cover Ethereum. And on the Ethereum side, you can see that it's really been a tale of 2 different halves over the last 6 months. Of course, Ethereum, just like most of crypto, if not all, virtually all, had a great boom following Black Thursday after everything dropped. You know, Bitcoin dropped 50%. Most projects dropped way more than that. And Ethereum was one that, you know, I believe got to around 80 to 85 and was able to just climb all the way up to 485 or so was the peak before closing at 477 on that peak day. But you can see right around the beginning of August is when we had that bearish divergence start to show up. And when it did, that's when we started getting all this volatility. According to this model, it never should have even gotten as high as it did. So keep in mind that this is far from a perfect model. But what it does do well is tell you that when it does go to those outlier prices, it's going to tell you whether those active addresses that are transacting on the network are actually justifying those prices. Clearly, they weren't. We had a big drop off, and now we're actually on pace to have our first bullish day in about 3-4 weeks or so. We'll call that 3 weeks. And I don't personally trust this. I think that we're still mostly just seeing weeks and weeks worth of bearish divergences here. If we look at the DAA of Bitcoin, or I'm sorry, of Ethereum, I'll show you just like we did for Bitcoin. Go back to daily active addresses here. And you can see exactly what I'm talking about. This is the last 3 months. It's just been a slide downwards where we peaked at about 523.5 daily active addresses, 523.5K. Our latest day, we were at 343.5. So that's quite a drop off, guys. I'll even zoom out to really show you some perspective here because we had a climb initially, and now it's starting to drop back off. After basically the Black Thursday event, you saw a huge surge in DAA, followed by price following, as is often the case. And then once we got up to here, we were already dropping way down in daily active addresses. So, this is kind of a lesson for a lot of people who think that using just support levels and resistance levels, and as long as Bitcoin's healthy, all the altcoins, including Ethereum, are going to exceed it. That's not necessarily the case. And Ethereum was a telltale example where, if you were to really look at price and the direction it was moving versus active addresses and the way they were moving, you really could have saved a lot of money. And perhaps if you had some bags, took advantage of this major bearish divergence, sold up here. Arguably, you could buy right here again, but I wouldn't even, in hindsight, looking at something like this, you wouldn't even want to buy down here because daily active addresses have just continued to drop. They obviously spiked in mid-September, but now we're seeing that same pattern form. And I personally want to wait and see for another more confident ascension like this before I'd be confident that Ethereum can go to 500 and beyond. Obviously, there are plenty of other metrics. We can look at social volume. We can look at MVRV, mean dollar invested age, and some other metrics that I know Dino is going to go into in a moment. But I really want to get across that Ethereum is one of those that a lot of altcoins have looked like lately, where it had this big peak up to mid-September and then fell off a cliff, and they haven't really recovered yet. Now, that being said, there are projects that are looking okay.
Yeah, Brian, before you continue, I shared the link in the Google Meet window, which kind of points to one of the reasons why we have probably seen this great demise in the daily active addresses for Ethereum, and that is basically just the rising fees on the Ethereum network. The network has been clogged by the proliferation of DeFi protocols, and in particular, it has been clogged 3 times, pointing pretty much correlating with the launches of SUSHI, Wi-Fi, and Uni over the past couple of months. So this sort of major drop off in the it could be that it's a private chart. Let me try and just
I've got
share.
denied access, so
Okay,
go
let me
ahead on your
try.
end.
Just really briefly showing this. So what we're seeing here is the amount of daily average fees as well as median fees. Let's just use daily average fees maybe on the Ethereum network. So essentially, we see these peaks pretty much coinciding with the tops for Ethereum, which is interesting in its own regard, but it also does coincide with the sort of most hype around 3 different projects, which I believe would be Wi-Fi here, SUSHI here, and Uni here. This was the launch of Uni. This was the sort of biggest peak of activity for SUSHI, and I believe this was when Wi-Fi was kind of launched as well. So you can see that, comparing it to the rest of the 2020, there was a massive surge in the average fee to interact with the Ethereum network. So if you were if you wanted to do any sort of small ROI type of transaction, it would take you about $6.6 to do so, which priced out a lot of smaller interactions with the Ethereum network, which in turn led to this sort of decline in daily active addresses. Now, the good news for just bringing the Ethereum network back into its normal shape is that we have seen sort of decline, an ongoing decline in the amount of daily average fees. However, still quite high. Like the average fee is still around $2 to interact with the Ethereum network to send or receive ETH via the network. So even though we've kind of went back to the days of like early or to mid-August, we still got a long ways to go to kind of catch up to what the market and the network is used to as far as fees for interacting with the Ethereum protocol. So I'm not too surprised to see the daily active addresses kind of declining over the past couple of months. If we start to see this kind of going back and normalizing back to the early to the 2020 levels, I think we're going to see another sort of bounce back in the amount of addresses interacting with the Ethereum network, which should also bode well for its price action in the midterm. So let me just stop presenting and give it back to you.
Yeah, thanks, Dino. And I see someone in the chat sort of agree. It's the gas prices were a major factor for Ethereum's drop off, and obviously that's going to correlate to less daily active addresses actually interacting on the network. So it does make perfect sense. All right, getting back on mine. Okay. So a few assets that are looking pretty good. I'm getting a little feedback, by the way, Dino, if you don't mind muting. Yeah, all good. So a few that are looking pretty bullish right now in spite of the choppy sort of situation happening for Bitcoin. I'm going to go over LEND first. LEND here, as you can see, it's been almost all bullish, and this is essentially measuring 2 years worth of data and just showing the past 6 months. So if we went back to a year and a half before this chart started, it would show that DAA was actually way lower, which is why you're seeing almost all green on this chart. You can see that not always are the price tops and price surges going to coincide right with the bright green bars here, but you can see that, even right here on the way down, we were getting lots and lots of daily active addresses, and that sort of contributed to this bounce that occurred, and I think will continue to occur, assuming Bitcoin can sort of maintain the 10.5 to 11K range or go higher, of course. So LEND is one to keep in mind. Another one, of course, is REN. REN had a big day yesterday. I think you had around a 30% surge, and it's still sort of moving, trickling upwards. You can see these large chunks of bright green are really indicative of some, increase in daily active addresses. So something to keep in mind here, especially when we had 3 straight, and this is our current day. So we could even potentially have a 4th straight day of bright green if REN's DAA picks up just a little bit from right here. Another one would be Maker. And Maker's been a little suppressed. You can see on pretty much every other one of these bright greens, we had a big price surge the day of or the day right after these bright greens occurred here, 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 here. So this has been the only chunk where we haven't really seen a surge yet, but given enough time, with this surplus of DAA, I find it to be the kind of model, the kind of asset that can have another big decoupling from Bitcoin, just like it did back here in mid-August. So keep those 3 in mind. And I want to now transition over to a little bit of MVRV talk. For those of you who don't know what MVRV is, it's essentially measuring what the average investor, their returns are over any given time period. So it's not necessarily a hodler's returns, because that would just be the actual asset. If it moves up 10% a day, that's what the returns are. If you see here, in green, this is the actual price movement, and MVRV mostly kind of moves along with where price goes, but not entirely due to FUD, FOMO, non-optimal trades. Sometimes they might even be better than hodling, but more often than not, they tend to be a little bit worse. You can see that as time has gone on, going back to October here, the price has actually sort of exceeded the MVRVs, and that's what we often see because traders tend to mostly lose. If you take the average trader, they mostly lose against those who are able to just patiently hold. If you look at these different lines, we've got brown with a 30-day MVRV, pink is 180, and red is 365. And we generally look for buy opportunities when the MVRVs are below 0. And right now, they're actually all above. This is very recent, but Bitcoin's 30-day is now above at about plus 4% for the average trader. If I can highlight it, there we go. 180 is about plus 7%, and 365 is about plus 16%. Now, all these considered, if you take all of them and see that they're in the positive, it might be just a subtle sign that there's still a little bit of euphoria going on, especially with this surge above 11K. We're already starting to see that some commentary on Twitter and Telegram, Discord, Reddit, they're a little more positive than they were last week. And I'm going to actually show here just how negative we were going into October. We were starting to hit all-time low levels in sentiment, and we calculate this by combining the volume of commentary by the ratio of positive versus negative comments that are occurring in regards to conversations about that asset. So you can see here, the weighted social sentiment is taking the sentiment balance times unique social volume, like I said. So the balance is the positive versus negative ratio, unique social volume is the overall commentary, and we actually got to close to -1 below the standard deviation, where we would normally expect comments between positive and negative to be. And we are starting to climb up. I'm going to zoom in just a little bit to give you a better idea. We'll just do 1 year instead of 2, 10-9.
Yeah, you could also just draw on the minimap or, yeah, right there.
Oh, you mean highlight like that? Yeah, good idea. Let's try that. So this is since mid-July, essentially. You can see that it dipped into negative territory kind of correctly. Twitter, every once in a while, Twitter can be kind of good at predicting when local tops, or they can actually make them come to fruition. You can see it about 11.77. That's when it dipped into negative territory. And about a week later, that's when we actually had that drop back to 11K. And then all the way to where we are now at 10.6. It's actually back at 11 now, but we've mostly been fluctuating in this range for quite a while. And as it ranged, the sentiment just got worse, and we saw more and more negativity coming and people doubting whether Bitcoin would be able to hold at those 10.3 to 10.8 levels, where it was sort of fluctuating for quite a while. And when there's that much doubt, we'll often see the opposite occur, because markets tend to go toward the path of least expectation based on our findings. And that's exactly what happened. We sort of have had this bump back up to 11K, and we're starting to see, subsequently more positivity, and we're getting closer to 0. Now, I'd probably expect that we get a little higher before there's another big turning point. But if we do go back into the positives, that's actually historically a time to be more alert and cautious of a further climb, because now the crowd is starting to get euphoric and expect that we jump up to 15K. And like I just said, when that expectation happens, the path of least expectation tends to occur. So something to keep in mind here. I got a little more I can show at the end, but I am getting to about half an hour after, so I'm breaking my promise of sending it to Dino in 20 minutes. So I'm going to do that now, and then we can sort of touch on a few more metrics at the end and answer some questions.
Okay, good stuff. Thanks, Brian. While setting my charts here. Just a reminder, guys, that at the end of the call, we are going to be kind of answering questions from the audience. So any type of coins or assets or market events that you would like us to take a closer look, if you're interested in a bounce back potential of a specific asset, like for example, REN, which I'm going to talk about in a second, or if you think that a particular asset might be priming to dump, let us know in the chat, and then we'll do some impromptu on-chain and social analysis right on the spot. All right, so one of the things that I wanted to add, and one of the actually the topic of this video, was on-chain lessons from the latest DeFi carnage. So everybody that is already a Sanbase Pro subscriber will be receiving a very, very detailed report on what we saw as far as different markers that helped maybe that first of all preceded the recovery of DeFi protocols and DeFi assets over the last 48 hours, but also that probably helped in its recovery in the first place. So if you were looking at the DeFi charts on Wednesday, this is what you would have seen. You would have seen a sea of red with some of the most popular DeFi related assets like Wi-Fi, SUSHI, as well as Uni being the hardest hit, right? They were anywhere between 35 to 50% down in the past 7 days. So at this point in time, we were looking at a segment-wide collapse, and a lot of people were already kind of pronouncing the end of the DeFi bubble. However, what we have in fact seen is just a confirmation that the market is nothing but cyclical, and so this is what that same chart. Oh, one sec. This is what that same chart looks like today. So I'm referring to this chart in particular. This is what it is going to look like today. So we got the DeFi segment here activated. Let's look at its latest price tree map. And look at that. Just like that, what 48 hours can do, just a wave of green. So this obviously, at least partially in the past couple of hours, has been driven by Bitcoin's ascent above 11K. The reason for that is probably multifold, likely a combination of the S&P 500 index also rising in unison, as well as some hype about Square, pledging $50 million. But I think they were basically announcing the news that already happened a few weeks back. But when markets are irrational, they're irrational. So in either case, we have seen a segment-wide bounce back over the past 48 hours. Now, I'm going to go into a few different indicators why we thought this was a real possibility, and we even reported on it at the time. And you can read the entire report if you have access to a Sanbase Pro subscription. So I'm going to use REN as an example of, okay, when I am full screen, sometimes my, let me go out of full screen because my tabs seem to be misbehaving. All right, so I'm gonna do my analysis on the example of REN because I think it's fairly obvious, but we have seen the same pattern occur on pretty much maybe 90% of DeFi coins that we were looking at on Wednesday during this sort of downfall here. So let's start with weighted social sentiment, right? Which Brian has already talked about. Basically, what we see very often and is very clear on REN's social sentiment chart is that extremely bullish sentiment is not a friend to a cryptocurrency. So we have seen these major spikes in hype and irrational market confidence towards REN during its 2019 top. Pretty much every top was coinciding with a relative spike in bullish sentiment. We have seen that also happen here during the peak in August as well as September. Now, since the September hype sort of started dying down, let me zoom in a little bit. We have seen a decided foray into negative territory or bearish sentiment. So this has actually been not a long time coming, but at least a few weeks in the making. And so one of the points that are raised in our report is that this isn't just an isolated incident. If you look at a variety of different DeFi related coins, you will have seen the same pattern. This is Wi-Fi, this is Uniswap, this is SUSHI, and this is REN. There's a few more charts here for you to look into as well, but the overall lesson here is that we have been seeing a steady decline in sentiment towards DeFi related coins ever since sort of mid-August to early September. And it seems like it has not been really this sort of foray into negative territory has been recent, and I don't think it has been necessarily priced in yet. And that's why I think one of the reasons why we have seen a pretty sturdy bounce back off of these levels was the fact that we were already sort of undervalued according to social data. Now, another very interesting metric that we have started paying a bit more attention to more recently is this network profit loss metric, which we have recently developed. It's not yet ported to Sanbase, but it is available on SanData, and we also make it available on a lot of our reports or talk about it in our reports. So what network profit loss does is it tries to calculate the total amount of either profit or loss, so the difference of a network on any given day. So basically, you can see here the description of this metric. So for each coin that moves on chain, we assume that the price at which it was last moved was the price at which it was bought, and then we assume that the price at which it was not, and then we assume that the it was sold the moment that it moved, right? So for example, let's say I purchased REN here, right? And I was kind of just sitting on REN for all of this time, and then as we saw a dip in the market here, I decided to sell, or I decided to move my coins. So once those coins moved from a very sort of high ROI into a negative ROI, the network profit loss says, okay, this person has sold all of their coins at a fairly significant loss. So when that happens on a network-wide scale, what we are going to see is this sort of massive decline in the average network profit, or in this case, a massive network loss, meaning that most investors that have been moving REN during the latest Wednesday, the early week drawback, were moving them or selling them at a major loss. Now you can also see a very opposite trend here during the peaks or tops here, where it was very clear, if we even zoom in a little bit more, that a lot of people were engaging in profit taking. So people that were probably accumulating REN ever since the early sort of May to July period were finally deciding to sell off some of their REN, which coincided with these spikes in average network profit, meaning that on average, the coins that were moving here were moving at a profit. People were deciding to finally sell their bags and start, exiting their positions, coinciding with, by the way, local price corrections as well. So we have also seen not just that, let's go back to social sentiment, not just that the social sentiment was relatively low, we have also seen that the investor sentiment is becoming very low, and that people are starting to move their coins at a high loss, meaning that on average, if they were in fact selling here, as this metric assumes that they were selling at a major loss. There was a fair amount of pain sort of felt by the market. And, be greedy when others are fearful, and be fearful when others are greedy, as Warren Buffett likes to say, even though he hates Bitcoin. I think he makes a valid point here. So this was another reason why we thought that a local bottom, at least, might be near, because there was a fair amount of pain on both the social side and investor side, lending the credence to the fact that we are probably going to see an exhaustion of sell side pressure and a capitulation of weak hands, which could allow the price to move upwards, as it did very shortly afterwards. The final sort of point that I want to make is one that Brian has already started making, and this is REN's daily active addresses over the past 48 hours. I think it's a very striking image that kind of confirms this idea that we have, that very often, if the price starts declining and continues to decline, while at the same time we see an opposite direction of its general network-wide activity, which we use daily active addresses for, this might indicate a propensity to bounce back. So if we look at daily active addresses for REN, there we go. So here we see, after pretty much several weeks to almost a month of a declining network activity into sort of a plateauing network activity here, we have seen a number of spikes in the general sort of activity with and the interaction with the REN token among its sort of local peak here, or sorry, local bottom here. So we can also look at the rolling addresses for an even better idea of exactly how big this spike has been. So we've gone from about 500 different addresses interacting with REN to about 1,500 addresses, almost 1428, interacting with REN in a span of about 36 hours. Now, obviously, this is going to be at least partially influenced by the people selling their coins at this point, but even that is fine. Like, it's just pointing to redistribution finally coming to an end. Weak hands moving their coins to or selling their coins to whales and the strong hands, which is going to allow for a a relatively strong bounce back. So for example, if we look at the exchange activity for REN and we look at its daily active deposits, which basically tells us how many addresses have been used to send REN to exchanges over time, we can see these massive spikes in REN deposits here during both of its 2020, both of its August peaks actually. So let me take out addresses. Yeah, so this was the I think about 4-month high in REN's deposits right around the August peak, and then pretty much the same thing happened during the late August, early September price correction. So here, however, we haven't really seen the same amount of pain being felt by people. So it leads me to believe that in general the sell side pressure has been largely exhausted at this point. And therefore, when we see this rise in daily active addresses, it's not even that influenced by people selling. It just seems to be people moving into their positions and in general interacting more with the REN protocol, which from a fundamental perspective means that we are relatively undervalued if we take the notional value of the entire network by market cap and we compare it to the general amount of activity on the network. According to this sort of metric, we would be undervalued, and that seemed to have been the case as REN has bounced back even before Bitcoin here during the October 7th and October 8th period. So there are several other markers that we talk about in this report, and we don't also just talk about REN. We make a point that this has been a sort of segment-wide phenomenon. REN, SUSHI, Wi-Fi, Uni, a number of different coins have all exhibited at least 5 to 6 different indicators to let us know that we might be approaching a local bottom. So if you want to see what those are and how you can use them on our platform, be sure to subscribe to Sanbase Pro and get access to this and other reports, which will be available on our homepage. You just go down here. Yep, go ahead.
I sent you a link for the top 100 holders for REN, non-exchange. If you want to open that up really quick,
yes, indeed.
We could talk about it together for just a sec. It's one other, I think, really good, valuable metric that a lot of people may underutilize on our
it
platform.
Seems like I need to...
just go to non-addresses 100.
Yep. Here we go.
So you can see very recently here, we had a pretty major uptick going from about, the high 480s, even down to early September. If you want to go back to like the 9th there at the bottom, we were at something like 450-ish or so, and now we're up at about 525-ish, 530. And it's pretty notable because we were going on, if you zoom out to about the last year, we were on a slide where we're at 500 all the way down to 430 million held. And right around May 25th or 26th, we started to see a big surge. And now we're up about 25, 30% since that time for the amount of tokens held off exchanges. And the reason this is notable is because when whales are moving their assets off, would you mind muting really quick, Dino, just because there's a little bit of feedback throwing me off. When whales are moving assets off of the exchanges, it's essentially a signal of confidence for them because they believe that they can handle the volatility and the price swings that are happening, and they won't need to do any sort of drastic quick buys or quick sells. And they're really content with allowing price fluctuations to play out and let some months or weeks or at least a few days go by before they'll have to make another move. And this is something I really like to look at for confidence in a mid or long term kind of surge or at least steady with where the price is. And we can look at another one really quick, Dino, if you want to just open LIINK while you're on that same screen. LIINK is a much more gradual pattern here. We'll see if it just keeps up top non-exchange. Okay, perfect. So you can see if you go back to the beginning of May, at the beginning of that, Dino, just highlight the, yeah, that's fine. Highlight the beginning of that range just so we can see what the amount held was all the way back to last October. Yeah, we were at 730-ish, and now if you go to the end, it's at about 770, and that's a pretty big uptick. That's, I don't know what the percent would be, at least 5 to 8% gained over the last year. And just noticing how gradually this metric is moving up tells us that the long-term whales for Chainlink really feel strongly that price can hold to where it is and not collapse, and it is getting enough attention and development and new things happening within the asset to justify being able to hold large amounts of tokens offline. And this is something that I think our community can really take advantage of and look for as validation that the asset that they're holding themselves is a safe property that they can feel good about for a longer period of time. So I wanted to point that out since we were talking about REN and some other metrics for some ERC20s that are showing local bottoms, just like Dino was mentioning. Yeah, why don't we, if you have anything else, Dino, we can talk about that. Otherwise, we can start taking a few YouTube questions here.
Yeah, so guys, anybody that's interested in any particular coins or anything that you want us to look into, be sure to type it in chat now so that we can get to it before we end the stream. I think this is quite an interesting image, just examining the historical trends for LIINK whales, right? You see pretty much the inverse correlation between the price of LIINK and pretty much every asset, crypto asset in existence, dumping during the Black Thursday crash. And on the other side, LIINK whales have accumulated about $7 million in LIINK at the time. Sorry, 7 million LIINK, which is about, it was about $14 million at the time. And so we've seen a gradual rise in their balances, which has kind of come to an end here during this sort of period of downward volatility, price volatility for Chainlink. And then once we were at about, we went below $13, Chainlink whales started accumulating once again. And they've been kind of ebbing and flowing more recently, but we have seen a bit of an uptick even here for LIINK recently. So yeah. Okay, we got a first question saying, have any metrics on sell? All right, so Sam, you are reading my mind, my friend. We have been talking about sell internally for a couple of days now.
The last 3 days, yeah.
Yeah, the last 3 days. I mean, we were talking about it for a number of reasons. One of them being that a friend of mine actually has some sell, and she's wondering whether to sell or not, sell or not. This coin baffles me. Just the fact that it was able to do what it was doing while Bitcoin was ranging, and pretty much throughout this DeFi carnage, throughout Bitcoin's ranging since the beginning, since like middle of September, it has been on an upward trajectory. I was trying to find one particular reason why this might be. There have obviously been some news about Bitfinex offering the sort of a variety of incentives for sell on their platform. So that seems to have kind of pushed the price a bit upwards as well. But I have written about sell, I think it was around here, where I already thought that we might be looking to cool off. And we have cooled off a little bit, but indeed not for long. So let's look at a few sell metrics right now to just kind of gauge where we are, where the project is at the moment, and whether it can really sustain these types of price levels, which are fairly ridiculous given that it has done nothing for like a year prior. So let's start with daily active addresses, right? And you can definitely see the increase in cells on-chain activity during this period here. So let's zoom in. There we go. So this is one of the more concerning signals for me personally, saying when I'm looking at a coin and I'm trying to figure out what the sort of general interest in the coin and the demand for its network is. So you can also kind of see the similar thing happening here during its July top and correction, is that we have seen this sort of uptick in general address activity, pointing to interest towards sell rising on chain, more addresses interacting with the coin, more addresses transacting sell on the network. However, what we don't want to see is we don't want to see this sort of decline in and a fairly sharp decline in the amount of daily active addresses compared to its price. And I think this might be where we are at the moment. Obviously, maybe it's still a bit early to say. Let's zoom in a little bit. But you can definitely see a relatively strong decline in the amount of addresses interacting with Cell over the last couple of days. So this is sort of a first sign of we might be headed for a cooling off period, which Cell has already started to consolidate, but we've gone from a high, I think all-time high of 1,600 addresses interacting with Cell, which is very high, to about 740 now. Now, 740 daily active addresses, although that's like half than what we had a few days ago, it's still relatively high for an ERC20 coin. Like there's only about 10 to 15 different ERC20 assets that have more than 500 daily active addresses on average. So we're still relatively high. However, the general trend is what worries me, and I would keep an eye on this chart in the next couple of days, and maybe even use the rolling daily active addresses for an even better idea. Yep, just to kind of give you an idea of how much we're dumping. We're currently actually at about 659 daily active addresses, so even lower than I thought, which is a pretty concerning signal. Let's look at its social data as well. Just to kind of see if we can track anything notable. Let's take the 1 day interval. Right. Okay. So another thing that we harp on at Santiment quite a lot is that extreme spikes in social volume like this one are also not a friend to cryptocurrencies. So I would not consider this to be a very bullish indicator in any sense of the word. The fact is that a lot of people seem to now be talking about Celsius for obvious reasons. But in general, when we see these types of spikes in in the social volumes, it usually indicates peak hype. People sort of irrationally confident in the performance of Cell, which I have seen on crypto Twitter a lot over the past couple of days. And usually it leads to short-term price corrections. And we have also seen the hype already start to dissipate a little bit over the last couple of days, as the crowd seems to have already moved on from Cell into more interesting projects. Obviously, with Bitcoin kind of now above 11K, I think that's also capturing a lot of crowd's attention. Now, what I have seen in the past couple of days is that Cell's exchange data has not spiked. So let's see if this has changed recently. Not yet. So this, to me, is the more interesting part. And I need to check whether there's any sort of bug in our data, because it does not make sense to me that we would not see a major spike in exchange activity for Cell and people moving Cell to exchanges. Okay, well, we're seeing it in terms of exchange inflow, which is the total amount of Cell being moved to exchanges. But in terms of the amount of addresses moving Cell to exchanges, it's relatively low. So let's look at exchange inflow, and let's take a daily interval. So you can see that over the last, 2 months almost, there's been a rise in sell side pressure for Celsius. There has been more and more users, addresses sending their sell funds to exchanges. So if we look at the coin supply on exchanges, let's see what happens. It's kind of been up and down, meaning that even though people are moving money to exchanges, sell to exchanges, they're also withdrawing sell from exchanges. So overall, I mean, in general, I think this is not a great sign for an asset and its long-term sustainability. And that's why I thought, like, when I was writing about it here, this is when I wrote about it, and I said, look, this is not looking healthy. We are seeing these major spikes in terms of the amount of people and amount of liquidity going to exchanges. People are priming to sell. I'm not sure if there's enough buy side pressure on the other hand and enough Celsius bulls to sort of maintain this upward trajectory. So far, there has been. But I would still I wouldn't buy into this coin if I were looking at these charts. Let's
Dino,
look at,
check out age consumed as well while you're there. I see there was
Mhm.
a big 6-month high spike on the 2nd, just about a week ago.
Yeah. So let's look at a daily. There we go. So what this means, what age consumed does is it tracks the movement of previously dormant coins. So when we're seeing these types of spikes in the activity of previously dormant coins, it means that people that have been holding or hodling Celsius for a long time, maybe even ICO investors, have started moving their bags. Usually this tends to coincide with periods of increased price volatility. I mean, you can kind of see it here at local tops as well and even local bottoms. Usually, like, this isn't really a top or bottom indicator. It's more of a volatility marker in general. But given the price action, I would consider this to be also a relatively bearish signal that some long-term holders might be looking to offload their positions. It might have already happened, or it might be kind of in the middle of happening as well. But yeah, indeed, we have seen a strong sort of uptick in the activity of previously dormant coins. We can also try to look at that differently. Let's see. Yeah, so mean dollar invested age is also another way to look at the general activity of the previously dormant coins. Actually, let's look at mean coin age instead. So what we're seeing here is the average age of all coins in the network. By age, I mean the amount of time that they have stayed in their respective addresses. So if you see an inclining slope like this, what this basically means is that on average, the coins are staying in their respective addresses, meaning that people that have been hodling coins are still continuing to hold them and they're not moving on the network. We have seen this sort of this spike in age consumed that we've seen a minute ago has kind of shown us that on average the network wide trend has moved away from accumulation into more of a distribution. Now whether this will kind of remain in days to come remains to be seen, but it's definitely another sort of relatively concerning indicator. Finally, I like to look at MVRV, which is the average profit or loss of a various groups of holders. So currently, let's first look at the MVRV, or average profit or loss, of all of the addresses that have acquired Celsius in the previous 30 days. So we're currently at about 1.33, meaning that short-term Celsius holders are at about 30% profit at the moment, which if you look at its chart, it's quite clearly so, right? However, what you want to see is you want to see historical trends, and you want to see sort of where we are or what the tops for MVRV were in the past, which usually indicate these danger zones where short-term holders are content with their profits enough to start dumping their bags. And obviously, these peaks in MVRV tend to coincide with local price peaks as well. So we're still not at the very sort of top as far as historical trends are concerned. So in the past, short-term Celsius holders were hodling to up to 1.71, or about 70% profit, and even up to 90% in profit before they started offloading some of their bags. So as far as the propensity of short-term holders to sell, we could go higher, which is kind of crazy, right? But just looking at or judging by historical trends. And then we can look at something a bit more distant, like 180 days, which is also relatively high. Also relatively, it's high because it's like this is what, 220% in profit, but we're not near sort of historical danger zones or historical tops as far as the MVRVs are concerned. So in general, when you see the higher the MVRV gets, the more sell incentive there is, and then the lower the MVRV gets, the lesser there is reason to sell, because you're either breaking even or you're even underwater. So why would you sell, right? So overall, there have been some concerning signs in Celsius on-chain and social data, especially over the past couple of days, when we're talking about its daily active addresses, when we're talking about some renewed activity by previously dormant holders in age consumed, which you can see. Let me zoom in. Which you can see here, as well as the social volume, which has now kind of turned relatively high, relatively inflated. The last thing, maybe let's look at very quickly, is the what the top holders are doing. So actually, let's look at the holder distribution. So what's the price of sell now? Like 113. Okay. So let's say I want to see what large Celsius holders are doing. So one of the very cool things that you can do on Sanbase is, let's say I want to look at the combined balance of everyone that's holding more than 100,000, between 100 and 1 million Celsius, and between 1 million and 10 million Celsius. Confirm. Okay, so it has been declining, and let's plot the price of it as well. Right, and especially here. So this spike in age consumed that we saw here is probably coming from this group of holders, so large holders. So we have seen sort of an ongoing decline, actually. Let me see if I can zoom in a little bit. Yeah. So in the past couple of days, we have seen a notable decline in the amount of Celsius held by these two groups. So this is addresses holding between 100,000 to 1 million and 1 million to 10 million Celsius. So large Celsius holders. Their combined balance has dropped from 46.9 million to 39.6 million. So this is about a 7 million to, so about 7.5, $7.8 million worth of Celsius being moved away from these large holders, which would also not be a great sign. But at the same time, I thought, this, I was also watching at this sort of a decline here, and I thought this might also be a top. So why Celsius has been continuing to pump despite a number of different potentially bearish markers, I wouldn't necessarily get into that. I'm not 100% convinced that this is a purely organic pump, but there have been, especially in the past couple of days, there have been a number of concerning markers that would, at least for me, I would be pretty cautious going into Celsius. There you go. Okay, anything else that we wanna take a look into? Brian, I was not paying attention to chat, so.
Yeah, no major questions here. I wouldn't mind showing my screen one more time because I want to touch on stimulus social volume and how it might have impacted crypto. All right. So what we're looking at here is our SandTrends platform, which you can easily go to by going to your icon in the top left and heading over here to SandTrends. And what you can do is you can look up any keyword. In this case, I've looked up the word stimulus. As many of you know, a couple days ago, Trump announced that he is going to stall talks about the stimulus after he and other members of Congress were not able to come to an agreement on the amount that they could expend. So when that happened and he tweeted out that there was going to be a hold on talks, we had a huge, huge spike here. This was about a mention of 86 when the norm was around 2 to 4 to maybe 6 or so. So obviously massive spike here. And when that happened, let me see if I can zoom in just a little. I want to make sure people can see this. It doesn't exactly make it bigger. We do want to get a full screen option here eventually, but for now, just bear with me. What essentially happened was this happened right at the bottom. And when the spike happened at about 10.55 or so, we started to have a surge, and it has really coincided well with that spike in terms of a local bottom occurring. And we went all the way up to 11K yesterday, obviously, and we're still there right now. I believe that there's definitely some correlation happening. And you can even see that the prior two largest spikes happened with a minor local top and then another more major local top here back in July and August. And I believe that when there is a chance of no stimulus happening, it's a good thing for crypto. And when there is a sign that a stimulus may be happening, it tends to be a bad thing. So I definitely recommend you guys keep this one in mind. You can simply open up Sand Trends, add in the word. You can even compare it to another word if you wanted to. So you can use all sorts of things like buy, sell, etc. You can also look at something like COVID, Corona, or coronavirus and see something like this. Obviously, there was a major inverse spike between social volume and what price was doing right back when Black Thursday happened in mid-March. We had our biggest spike and it gradually dropped down, whereas price moved up. And then you can see here, everything was pretty calm. I actually don't know what this spike was related to last week, but that actually, I think what it was
Probably
a
it's Trump getting corona.
I think that's exactly what it was.
Yeah.
Even though I think, didn't that happen a couple days after? I'm not positive because this was on the 2nd, but maybe it has been a full week now. All I know is that it was around the same time as the stimulus announcement as well. And they both kind of coincided with the bottom here. So there are plenty of political things that are in the news right now. We've even seen signs that assets overall are being discussed less on Sand Trends, and political or world news types of trends are being discussed more lately. But you can check anytime and see things like Square Alpha Domains. BART is being brought up right now. Obviously Wi-Fi in the news, and I wanted to show one more thing on Wi-Fi as well. Dino mentioned MVRV, and I really like to look at the 30-day MVRV because it's a good sort of hybrid between short-term and mid-term trade opportunities that you can take advantage of. And right back here, you can see in September when euphoria was really being maxed, we got up to about 1.75, indicating that average traders on the 30-day time frame were plus 75%. And in 30 days, when you see this at plus 75%, that's pretty massive. It's very rare that you'll see something close to like a 2x return average for traders over just 1 month. But as you can see, when we did hit that, there was a pretty steep drop off until about September 21st, between the 20th and 21st. That's when we went from positive to negative with these average traders. And once we went to negative, you'll notice we almost instantly hit a local bottom, right? So when we have that crossover between plus 2% and then negative 13% the next day, that's usually a psychological trend that FUD is starting to take over. And when FUD takes over, you get these local bottoms here. We were able to sort of gravitate in about the negative 10% range before dropping more. And then we got that rise again back to positive. And once we hit plus 14% or so, we went straight back down. And now we got to basically what we consider to be one of the lowest possible. Obviously, there are occasional exceptions, but for the vast majority of projects, if you get to about right here at negative 38%, negative 40% is kind of the rule of thumb that I think most of our team agrees upon as almost always the lowest that the 30-day MVRV tends to get, with the exception of like Black Thursday and things that are pretty historic. So once we got to about negative 38%, that's when we started to see that there was a sign that it can't go down much further. And FUD was really starting to take over questions of whether the project entirely was dead. And sure enough, as I talked about at the beginning of this call, we had that major bounce here. So definitely keep in mind the MVRV metric, particularly the 30-day, because I think it's a good mishmash of short and midterm trade opportunities.
Yeah, anyone interested in more about Wi-Fi should definitely go to our insights page and read the insight that Gary has written yesterday on Wi-Fi. And there's a number of different charts showing what we thought about Wi-Fi yesterday, and also probably one of the main reasons why it has bounced back like by 25% is the fact that a number of big shorts coming from Alameda Research have been closed, which seems to have done pretty well to pump the price back upwards. But if you want to read how you can make, well, not you, but you that had $5 million in collateral that you can put into a DeFi protocol to short Wi-Fi, how that version of you could have made $500,000 in 3 days by shorting Wi-Fi. It's all in that insight. So give it a read.
It's a great write-up. Yeah, great job once again on that, Gary. I think it's a solid way of really understanding how people can take advantage of the FOMO that can occur for any given asset over time. And Wi-Fi was a telltale example. And now we're on the opposite end, and we're dealing with lots of FUD for it. So yeah, definitely check that insight out, and go to insight.santiment.net for plenty of great content by many of our staff members, and we hope to see you in our Discord as well. If you want to link to it, just head over to our Twitter, and you can see it right at the top in our bio. All that being said, I think we can wrap it up here, guys. Thank you all so much for joining us. I think this will be a very interesting week, and we will be updating our community on our Discord about any fluctuations or outliers that may be notable. And for now, we bid you adieu.
Thanks, guys. One final request. Please make sure everybody that's here still during the stream and people that are here afterwards, be sure to subscribe to our channel, like, and leave a comment. I know that this is just the general cliche by most YouTubers, but it really does help us. We have been growing relatively nicely in the past couple of weeks, but we definitely want to pump up those numbers so we can kind of get validation that you guys want to see more of this content. So if you do, please make sure to subscribe and leave a comment saying nice or bad things about us. Both work for the YouTube algorithm. No, just kidding. But yeah, in general, any sort of interaction with our YouTube channel helps us a lot and makes us lets us know that you guys enjoy the content and that you would like more of it. So yeah, thanks.
Yeah, thanks for mentioning that, Dino. All right, everyone, you have a great weekend, and we'll talk to you all soon.